Thanks, of course, for joining us. As you know, we're here to discuss the rollout of a new addition to our marketplace that's now available for all verified bidders to buy royalty assets and for many investors to sell the assets that they've bought via royalty exchange. So today we're going to go through a live walkthrough of how it works. We're going to do that shortly. It's going to be followed by a question and answer session. But before we get into that, allow us to introduce ourselves. Many of you know me. I am PJ Miklas, the head of investor relations here at Royalty Exchange.
And I'm Gary Young, the co-founder of Royalty. And as you know, we are the largest marketplace for buying and selling music royalties in the world. And today, we're going to show you a brand new addition to our marketplace that will dramatically expand the number of catalogs you can buy and hopefully dramatically expand liquidity for catalogs that you've already bought. In fact, starting today, there are 58 unique catalogs worth more than $2.7 million that you'll be able to bid on. And we'll talk more about this addition to the marketplace in a minute and how you can participate. But first, I wanted to share some results from the last year of royalty investing. So, over the last year, the average royalty asset bought on our site has generated a 14.6% cash-on-cash yield. Now, in a world of negative interest rates and insane valuations, there are very few places where you could generate double-digit cash yields, and we're honored to be able to bring you those deals. Now, since we've started in 2016, we've brought you more than 700 deals that were worth more than $67 million, but we're just getting started. And what we're going to show you today is a big part of the future for us, and we believe this is going to expand the market for music royalties in a huge way. But first, I want to tell you the story of the music industry over the last 20 years, because as investors in music royalties, you need to know where the industry has been and where it's going. So the year is 1999, right? The music industry is making money hand over fist. It's the peak of selling CDs. Right, record stores litter the landscape. Big box retailers are selling millions of CDs every week. And in short, it's the peak. And nobody in the music industry knew it. On June 1st, 1999, two kids released an app that would destroy the record business, bankrupt major labels, and change the way we listen forever. That, of course, was Napster. Napster went viral, and it started on college campuses and spread all over the world. And in less than 2 years, Napster had more than 80 million users. And Napster was a peer-to-peer network that let anybody share MP3 files of music with one another. And suddenly, with the growth of Napster Music, came free. Right? The labels fought back, and they ended up killing Napster, right? But they were trying to fight a wave of technology with lawyers, and it didn't work. And for the first time in most music executives' memory, recorded music royalties and revenues declined. Right? The labels started laying off staff, right? They started going bankrupt, right? And the technorati in Silicon Valley proclaimed that from now on, music would be free. That was it. That was the end. No more paying for music, right? Now, it's 2003, right? And another technologist from California showed up on the doorstep of the 5 major labels with a solution to their piracy problem, right? He believed that if you built an online store that made it easy to buy music, people would stop pirating, right? And of course, the labels resisted. They were not exactly open to technology and digital music, right? And they resisted. And then they kept losing money, and they kept laying people off. And he came to them and said, look, my computers represent 4% of global PC market share. This is a tiny market. Right? Let's experiment so you guys can learn how to sell music online, and we will build the technology for you. Eventually, the 5 majors acquiesced and said, okay, we'll do this with you. And right, of course, that man was Steve Jobs, and that store was iTunes. And Jobs was right about shrinking piracy, right? You made it easy to buy, people bought, lots and lots of MP3s. In the first month, iTunes, just Mac users bought 1 million songs, and it grew like crazy. Right? But as part of his negotiations with labels, he got one concession that would ultimately prove to be almost as damaging to their revenue as piracy itself. Right? He showed up like this, bearing gifts. And the thing is, with iTunes, for the first time, you could buy a single song. You didn't have to buy the whole album, right? Traditionally, record labels would release 1 or 2 great singles, and then they'd add mostly 8 or 9 kind of unforgettable songs that were filler, and they would charge $15 for it, right? The album was a bundle, and iTunes tore it apart. People just bought the good songs. They bought the ones they wanted, and they didn't buy the whole album. And then suddenly, the record business, which relied on making $10 to $15 per CD, per release, if you will, was suddenly making $2 when consumers bought those 2 songs they really wanted. Right? And so even with the Jobsian life raft thrown to the music industry, for the next 12 years, the music business's revenues would decline every single year. More labels went bankrupt. They consolidated, right? The major labels went from 5 to 3, right? Artists had to step up with touring and merchandise to survive, right? And between 2005 and 2009, 2,600 record stores shut their doors forever in the United States. There's the Virgin Megastore in Times Square. Basically, it was winter in the music business. It was an industry left for dead, right? And then, in the space of this carnage and pain and nothing seeming to work for the music business, 2011, a music service launched in the United States from Sweden, right? And the value proposition was even better than iTunes, right? Instead of paying 99 cents for a song, you could pay $10 a month and you could listen to any song you wanted from basically every song that had ever been released, right? And of course, with an irresistible value proposition like that, Spotify grew fast. They added millions of subscribers to this new service. And then a few years later, in 2015, right, something remarkable happened. The music industry grew, right, for the first time since 1998, right? So it was 17 years of steadily declining revenues, right? And the growth in 2015 was small, like 3.5%, right? But it was a sign of life. It was something, right? And what drove that was streaming. And the math behind that resurgence, pretty simple, right? In the 90s, the average music listener spent $40 a year on recorded music. They bought 3 to 5 CDs on average. Now, your average music listener is paying $10 each and every month. So they're spending $120 a year to listen to music, right? So their average revenue per music listener tripled in that time. And since then, the music industry's been on a tear. I mean, so far in 2019, the recorded music revenue, right, for the industry as a whole grew 18.5%. Now, there are not many 100-year-old industries that are growing at 18.5%, right? And that growth is all driven by streaming. And, we believe and we've seen that this is a fantastic opportunity for investors to acquire amazing assets, right, that generate double-digit yields as the music industry comes back to life. Because the fact of the matter is, for a lot of songwriters and artists and record labels, for that matter, their catalog was left for dead, right? I mean, it was kind of puddling along, making a little bit of money from iTunes. Every year they'd make less from physical, but now suddenly people are listening to it again because there is no distribution limitation, right? Like your average Walmart has 500 SKUs for music, and if your CD wasn't on one of those 500 SKUs, you weren't making any money, right, from physical. And so now you're a search and a click away from playing music that could be 25, 30 years old, right? And so I guess, as PJ, I've been talking a bunch, so I think it probably makes sense to talk about our investment thesis on the music industry. Now that everybody out there has a good foundation, the last 20 years of the music industry.
Yeah, of course. So why music royalties? I mean, Gary just talked about one of the main reasons. There are definitely a lot of cases that can be for investing in music royalties. I'm going to highlight what we find to be the top three right now. The first one is the low correlation of the returns and the yields that investors are seeing. So people are allocating more and more towards alternative investments these days to diversify the risks that they're seeing in traditional markets like stocks and bonds. By definition, alternative investments have a lower correlation to those traditional markets. When added to a portfolio, they can increase the risk-adjusted return through the diversification benefit. Now, one of our main missions as a company here is to show the world that not only are music royalties an effective alternative investment, but they're arguably one of the purest alternative investments that are available today. The yields and the returns that investors are seeing are dependent on consumption of music, which we have found and we look to continually prove is relatively independent of what stocks they're doing, what interest rate and bond markets are doing, what oil and gold prices are doing. So when added to a portfolio, they can, of course, increase that diversification benefit. Gary touched on it as well. We're talking well into the double digits in terms of yields. Investors in assets on our exchange, just through Royalty Exchange, have seen great cash yields over the last year. We just got to the point where we can actually report the 12-month numbers, and the average yields for all of the auctions that we administer has been 14.68%. Now, that's across two main types of auctions. There's term advance auctions and life of rights auctions. Term advance auctions are the most popular that we see. By definition, an investor pays an upfront cost to buy the royalty stream and then receives that royalty stream for the life of the term of the investment. Very often it is 10 years. The average cash yield that investors have seen on those investments through Royalty Exchange, 18.28%. For life of rights auctions, very simply defined as you buy a royalty stream, you get paid as long as the royalty stream pays. You see an average cash yield of 12.03%, or I should say investors have seen that over the last 12 months from the deals that we administer. And of course, it's passive income. That's probably one of the major selling points of the income that you receive from royalties. Most of what you buy through our exchange in particular are passive and partial interest. You're getting that right to the income. All you have to do is own the right to the income and you receive it. The cash pours in, the income pours in. You're actually inherently in buying royalties, you're getting a number of partners with aligned interests to you that are already taking care of a lot of the heavy lifting, whether it be collecting the royalties, whether it be working to grow the royalties and marketing those royalties and the consumption of that music. Talking about like publishers, administrators, record labels, even the artists and the songwriters themselves. And the third investment case, Gary already touched on it. The music industry is booming. We think that it's in a bull market that is really only in its second or third inning right now. And analysts around the world agree. You've seen reports echoing what we're saying from Goldman Sachs, Citi, Raymond James, Morgan Stanley. Goldman Sachs is actually basically every time they release a new report, they revise their earnings estimates for the music industry upward. They've done it like 4 or 5 times, and they're just extremely bullish. And it's a general consensus that we see in the industry. And that's really why we're so excited to bring these types of opportunities to you and to be the largest exchange on which you can purchase these assets. For the first time in a while, obviously the industry is growing. The Wall Street Journal, you saw that, as Gary mentioned, recorded music grew 18.5% in the first half of the year, driven by growth in streaming. Warner Music Group's streaming revenues were up 29.4% year over year, and their overall revenue was up 18%. Just looking under the hood at the streamers, as of the streaming companies, the digital service providers, as of July 31st, Spotify has 108 million paying subscribers. That comprises, or in addition to that, there's 232 million monthly active users. Quarterly revenues for Spotify grew 31% over what we saw in 2018 in the same period. Apple Music now has 60 million paid subscribers. That's up from just 40 million a year ago. That's a 50% year-on-year growth in paid users. Amazon growing even faster. 60 million paid subscribers. 32 million paid subscribers. That's growing at 70% a year. And that's driven a lot by the Amazon Echo speakers. And YouTube is nothing to slouch at either. They have 15 million paid subscribers in their music service, and that grew 60% over the previous year. So all in all, across those four companies, there are 215 million people worldwide paying for monthly access to music. And what's really interesting is the data is only getting better by which these royalty streams are paid. So, we of course now have access to data down to the single play and download level. And it's not just the hot artists that today that are benefiting from it. There's a lot of catalogs from years ago, 10, 15, 20 plus years ago, that are experiencing this growth, and the growth in streaming and more subscribers listening to their music and consuming their music. We have a couple of really interesting examples that we've seen on our site. The first one is Tupac. It's Tupac and the Outlaws, his first group. Catalog that hasn't had any new music in over 20 years. But look at the growth that it's seen. This is a classic catalog of hip-hop songs that if you're a hip-hop fan, you're probably familiar with this. You probably have a couple songs from this catalog on some of the playlists that you have on Spotify, Apple, or Amazon. And you can see it. I mean, nothing produced in the last 20 years, and this thing is a steady stream up to the right in terms of growth. Second example I give you is a larger deal that we did here at Royalty Exchange, Dire Straits. Look at their sound recording royalties. I mean, this is a band that dissolved for the first time in 1988. They got back together a couple times. They released a couple live albums. Have not released a new album since 1995, and that was an album of live performances. But yet you see, as you look at these year-over-year numbers, streaming continues to grow, and that contributes to the revenue that the royalties are, the revenue associated with the royalties that are being paid.
And I mean, and this is a perfect example of what we were talking about earlier, where, look, if you go into a big box retailer, they don't have Dire Straits' entire back catalog available for you to buy, right? But you go on Spotify and it's right there, and people are consuming that and paying. Artists and rights holders and investors are getting paid on it.
Absolutely.
Which is a beautiful thing. And I think that trend, right, like half of the consumption music streaming services is the back catalog, right? So it's like, it's this thing where you get these, it's not just Drake and Ed Sheeran and the people that are really hot today that are benefiting from this. You have all of these catalogs that people couldn't afford to put into a store, but right there, making more money now than it ever has, which is why it's really exciting and interesting. So I think it probably makes sense now to talk about this new addition to our marketplace, right? So we're calling it the order book, right? And right now there's 58 catalogs worth more than $2.7 million that you could bid on starting today. And the goal with this is to massively increase liquidity within this market. So if you're on the call and you've purchased royalties from us before, you probably assume that you were going to hold it to maturity or you're going to hold it forever. Okay? And if you want to do that, totally fine. This is a way that if you want to get liquid, if you want to realize some gains, or if you want to reallocate capital, this is a way to do it, and it's a way to get liquid with price certainty and very quickly, right? And so I think it probably makes sense. I'd like to, PJ, if you don't mind, I'd love to show everybody out there how this works, right?
Absolutely.
So basically, if you go to our site and you click on listings, this is how you get there. Click on listings, then you scroll down on the left-hand side, and you see that go to order book. Click that, and then you're going to be taken to this page. We're actually going to go right here. We go. Thank you, PJ. So basically, where we're at here is this is a table that lists all of the assets that are currently in this order book. Now, for this, and as you'll see up top, it is in a beta, right? So there's going to be some bugs. It's not going to be as fast as it'll end up being, but this is what's here right now. And currently we have these 58 catalogs are all ASCAP 10-year deals. Okay. Now, what you can do with this is first you'll see the columns, right? So the earns through column represents when the 10-year term ends. The buy now price, if it's filled in, is whoever owns this asset right now has set that price they'd be willing to accept immediately for you to buy it. Right? The LTM column is, of course, the last 12 months earnings, and that is updated automatically as new statements come out. And then, of course, the dollar age column is basically a measure of how old the catalog is. And dollar age is a metric that we invented to help us and you better understand catalogs. So if you imagine, the longer music has been out and making money, the more, or the, I should say, the less volatile and the more predictable those royalties are, right? And of course, like with any income investment, right, more predictable it is, the more valuable it is. And so we found that dollar age is very useful for predicting the quarterly ebbs and flows of royalties. Okay. So now, of course,
I would just add there that if you want to see how to calculate dollar age, you can just go to our blog. One of the recent posts in our blog actually explains exactly what it is and how we calculate it for a given catalog. So you can go ahead and check that out yourself.
Oh, that's great. Yeah, thanks, BJ. Okay. So now, of course, on the buy now price, the LTM, and the dollar age, you can sort those. So you can say, okay, like this, these are the youngest catalogs, these are the oldest catalogs. And then we could also sort by the buy now prices. And so these right now, there's 10 catalogs with buy now prices. Actually, there might be a few more now. But basically, we're going to go in and look at them. And so these, if you want to find out who has a price that they're automatically willing to accept, you can sort by the buy now price. And as we scroll through, some of these are fairly high, but we're going to scroll through to this one. This one is we're going to click here, right? And now this takes you to the asset details page, okay? So up at the top, there are tags, and these tags represent different things about the catalog. So this is an ASCAP catalog, right? These are hip hop royalties. There's some Latin music in there, and there's some TV and film royalties. And then below that, you have this box which encompasses a summary of everything that we have on the catalog, right? So the type is a term advance, which means it'll end after 10 years. The second thing is the last 12 months earnings, right? And so this is $8,800. Below that, you see the lifetime earnings. Below that, you see the 3-year average earning. And so basically, this is the average annual earnings over the last 3 years. And we find this to be a very useful metric because you can see, well, how's the catalog trending, right? And so here, this one is quite interesting because on average, made about $5,000 a year over the last 3 years. But in the last 12 months, it's made $8,800. So it's growing, which is interesting. Then below that, you have the dollar age we already talked about. And then here's the number of tracks that are included. And finally, you have, this is the earns through date. So this catalog will pay out whoever owns it until August 27th, 2028. And here you have basically the earnings and the earnings source breakdown, right? So you have TV and film, you have international sources, you have streaming video, you have radio, and you have other sources, right? And it's all presented here in a pie chart, okay? So then, of course, here you have the recent earning, how much it's made each quarter, right? And these most recent quarters only represent the international payments, so that's why they look so low, right? Because the way ASCAP pays, so ASCAP pays 8 times a year, 4 times for domestic and 4 times for international. And so this is only representing the international payments. And this catalog makes about 1/3 of its money from international. And then below that, you have the included track. So now if we scroll back up, so now you have all of this information. Now what can you do with it? right? So here you see there's a buy it now price. The buy it now price is $23,000, right? And the last 12 months earnings, $8,000, right? So that gives you a sense for what sort of multiple you'd be paying to collect these royalties until August 2028. Then you could see that there were 0 offers made on the catalog because we just launched this a few moments ago. But if you want to buy it now, you can click this and buy it now, right? If, well, I'm not sure I want to pay $23,529, I think I'd rather make an offer, right? And so that's what this button does. And this is on every catalog, independent of whether or not it has a buy now price. And the idea here is that make an offer button, you're going to click it, you fill in what offer you want to make, and then immediately the owner of this app is going to see an email with your offer. And they'll be able to accept it, reject it right from their email, right? So this is a way to communicate and to signal price in this market and to increase the interaction between buyers and sellers, right? Which is going to increase liquidity, and hopefully we can increase the liquidity premium, if you will, for the value of these catalogs. So if you've bought something already, right, as we build out this implementation, we should see prices rise because people can get liquid, right?
Now, Gary, you mentioned that this is only available for ASCAP 10-year term advances. Now, we do plan to build out the offerings that are available within here.
Yep.
To BMI, to include life of rights auction.
Yeah, no,
or assets.
Yeah, no, to build this in a way that it automatically updates with new earnings, we had to pick something to start with, right? And so we started with ASCAP 10 years, right? And then over the coming weeks and months, we'll be adding additional assets. The last thing that you can do on this page is if you want, say you're not ready to bid or buy now, you can click this and save it, right? And then what this does is when you go back to that table view, right, you will be able to see all of the catalogs that you've started, so you can follow it over time, right? And you can see how it's performing and see if you want to update your bid or take advantage of the buy now price. Okay? The other thing on the offers that I forgot to mention that I should mention, so the offers on this are binding. So if you send someone an offer, they can accept it and you are bound to complete the transaction, right? The offers expire after 3 days, no matter what, right? But also, if you want to withdraw your offer anytime before the 3 days are up, you can also do that right here in the interface. So you have that flexibility, right? And so I think that covers how this works. I think what we're going to do is we're going to post a link right now. You should see it in the announcements, and that you copy and paste that URL, you are going to go to that table page, okay, where you can see all of the different assets that are available for purchase. And so I guess it makes sense at this point that we've had some questions come in, and let's answer questions. And PJ and I are going to be here to answer questions. And if we don't get to your question, I promise we will follow up via email with an answer for you.
Okay, so
what do we got? What's the first question?
First question is, do you have to be an accredited investor for both book orders or syndications?
Yeah, so for the private syndicates, you have to be an accredited investor to participate in
Right,
those.
which we haven't discussed on this call.
Yeah,
today.
yeah. And for the order book, you don't have to be an accredited investor, but you do have to be able to pay within 2 business days of your bid being accepted. What's the next question? Oh man, there's so many.
Robert Cantor asked, will the order book have only term assets, or will there be any life of rights or life of artist listings? I think we answered that by saying that eventually we will be adding those.
And we will be, our goal is by the end of the year to have ASCAP and BMI 10 years and life of rights up here and available for purchase. So we're moving towards that.
Next question. Is further detail available on earnings sources? For example, On the hip hop catalog listing at 23,000, 67% comes from TV and film, which could of course come from one large sync deal. Can that historical data be provided to inform a purchase?
Yeah, that's a great question. So this is version 1, right? This is the beta, and one of the improvements that will be coming out in very short order is we're going to increase the amount of data that's available on that page. So, which should, because like our goal is to give you all the information you need to make an informed decision on whether or not you want to invest. So we're going to be adding more and more data to it as we go. All right, so now the next question.
Okay, if I needed to liquidate only a piece of the royalties I bought, am I able to do that?
Yeah, great. That's another good. Not right now, and I'm not certain when or if we'll be able to do that. The way that this works is one asset purchased, one listing, right? And at some point in the future, we'd love to be able to divide these up, but we're not there yet, and we won't be there yet for quite some time.
One question, can you add the artist names to your track listings? It would be helpful.
You could add the editorial. It's not helpful to not have the artist there, basically. Is that what
Yeah, they basically said it's extremely onerous to have to look up each one based on the title or number, especially for larger listings. The question is,
yes,
can we add the artist name?
Yes. So the interesting thing, so we're going to eventually do it, and in the next release of this, we're going to have highlighted the top 5 earning tracks, right? Which should make your search much easier. As of right now, we totally get it that there's 100 songs in there. You don't even know which ones are making the most money. So the intermediate step before we can add the artist to it is going to basically be pulling out the most valuable songs based on their contribution to earnings.
Mm-hmm.
And so then that should sort of limit your search area. And then eventually we're going to be adding in the artists. It's a more challenging technical thing than you would expect. So, but we'll get there.
Long term, will you keep doing regular auctions as well as the order book?
Yes. So the plan for now is to originate assets from songwriters, producers, artists through our traditional auction process, and then to offer liquidity for you via the order book. Now, at some point, we'll probably originate assets through the order book, but that's going to be a ways away. So the auctions aren't going anywhere.
Okay. Here's an interesting one for the seller side. Will this platform have an asset valuation tool for sellers?
So we already have an asset valuation tool for sellers, which is something else called Know Your Worth. So if you're a seller and you want to use that tool, you could do that, and it takes about 90 seconds, and you can get a valuation on your ASCAP or BMI royalties.
Okay, another one that came in, are these the same assets that are being auctioned?
They are catalogs that we have auctioned, but they're ones that we've already auctioned. So there won't be any simultaneous listings. There's not going to be something in the order book and on the auction side. So step 1 into our universe is we do an auction. Step 2, if you want to get liquid, is the order book for now.
Okay. Couple questions came in from international investors asking if you're Canadian, if you're Italian, if you're from other countries, can you buy these assets on our exchange?
Yeah.
Absolutely.
There's consult your local investment advisors and tax people, but generally there is no limitations to buy royalties on our site.
Now, if using this new platform, one question that came in was, what are the fees for the buyer and seller?
Got it. Yep. So there's basically a 15% transaction fee, and it's effectively just paid once.
Right.
So.
Okay, and I think that we still have some other questions coming in.
Well, let's keep going.
Okay. Will you make historical transaction data available for those who want to see what type of multiples or IRR trades were made at?
So yes, on the historical prices, we probably aren't going to do a fixed time IRR, but you'll be able to see in the next version of this what the catalog sold for at auction in the first place, right? Because we know that that is such useful information when you're crafting a bid or crafting and trying to set your buy now price. And so that will be in the next one. And then eventually we want to get to the place where every asset has a list of all the prices people have paid for it over time. And that's where we're going. And then you'll be able to see, let's say it's 2024, and you'll be able to come to the site and see, okay, in 2018, someone paid this much for the 10-year. There's 4 years left. This is how many times it's changed hands. This is how much time is left. This is what the prices were paid. So in the next version, you're going to be able to see the most recent price paid, and then we're eventually going to have basically a list of all the prices paid over time.
Are there any special privileges for joining the All Access Investor membership? As in to say, do you get first, is it like a first come, first serve situation for orders here?
No. So All Access Investor is something separate from this. So if you are verified to bid on any auction on our site, you can place bids or accept buy it now prices on this, right? And you're seeing it at the same time as everybody else. All Access Investor is to get a first look at private syndicates. And there's another portion of the order book, which is basically the ability to place bids based on certain quantitative characteristics of catalogs that come in through our Know Your Worth tool. And you get all sorts of exclusive content, original research, things that are valuable, and you don't pay the $500 transaction fee for each transaction.
That's one question that came up. What's being charged to investors? I know we mentioned the 15% we are charging to
and so
we are charging to sellers, but there is a flat fee of $500 for purchasing assets for an investor, if you're not an All Access investor. Is the average yield your company has provided, which was 14.68%, is that based off of what investors have collected in the last 12 years? Or is that based off of performance trailing the 12-month end of the auction price?
That's a great question. So those numbers that we shared at the top of the call are actual yields that people have gotten over the last year from things they bought. So it's not like the average price someone paid that generated a 14.68%. That's actually cash on cash yield paid to the investor.
So that's, of course, the highest bidder in any particular auction received that. So some people may have paid more than others. Independent of that analysis, the average post-transaction yield on a cash basis is 14.68%.
And these are great questions. This is awesome. Keep them coming, guys. What else do we have?
Another question about the fees. Bear with me 1 second. Since the remaining terms on these listings vary, can you please add some metric like time left multiplied by LTM to standardize the listings? So we do for every auction include the actual end date that the royalties will stop being paid to the investor. But I'm
gonna write that one down. That's interesting. I think the only concern I have about that is, so we have the earns through date, right? It would make me a bit worried to just multiply that by the LTM and just say this is how much this is. So we can consider it. No promises on if we'll do that part, but certainly you can see in every asset detail page when you're going to earn through and when it ends, basically.
Okay.
So that
here's a good one. Can we see offers made by other investors in the order book?
Yes. Yes. So when you go to the asset detail page, you're going to see below that buy now or make an offer, you're going to see the other offers that have been made. Right? Because we gave you guys a live demo, there wasn't anything. But you'll see the highest price that was made as an offer, and then it'll descend from there. Right? And you'll see the ones that have expired as well. So you'll be able to get a sense for, okay, some other investor made a bid at this price. It was not accepted. So you can start to see where people are coming in terms of pricing, which is really exciting because so much more interaction and price discovery that's possible in the secondary market.
Here's a good one. Who actually pays the royalties? Do you guys receive it and send it on, or is it paid directly from a certain royalty clearing house?
Yeah, great question. So we administer the catalogs. We have a team house that does that. So basically, you own it. We assign the royalties to us, and we pay them through to you, right? And that's part of the reason why we administer catalogs, because if we didn't do that, we couldn't offer the secondary market with the liquidity, and we couldn't make it as seamless and frictionless as it is.
We have a number of resources on our site on royaltyexchange.com as well. If you go onto the investors tab, there's a number of documents that you can download and check out that will go into detail about how exactly royalties are collected, whether it be by a distributor like a performance right organization like ASCAP or BMI, or any other of the distributors that we do deals with. Here's a good one. So the order book is for investors liquidating their asset. The regular site is for origination of assets by artists. I think that question is kind of twofold. I think he's also asking, will there originally at any point be origination order book?
Yeah, I mean, there will be. It's going to be a while. So for now, whoever mentioned that has a perfectly correct understanding.